Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Friday, December 6th, and thank God it's Friday. It was a nice short week here, and I'm sure we all are trying to get back into the swing of things after a nice little holiday break here. We're going to shoot right into this because we got some important economic news releases scheduled for today, and actually, it's the most important one we've been waiting for all week, and that is jobs. So, jobs reports for December. Back in November, we had 100,000 new jobs that came in. We figured it would have a slight uptick. Basically 50% uptick, and basically doubled. So December's jobs actually doubled. Great news right there. So better than expectations. Unemployment rate, it was at 8.7 back in November, and we figured it would remain the same. And actually great news, it dropped. So that's also fantastic news. Jobs are looking better right now. Average hourly earnings for December. November was negative, so it dropped a little bit. And basically, we figured it'd have a slight uptick, about zero point 0.2. People would be earning a little bit more money, and that came in true. So, this is all fantastic news. I do urge a little caution as to let's wait till maybe February, March, kind of see what kind of numbers come out a little bit afterwards, see if these were something, because as we mentioned back in November, people kind of stopped looking. People looking for work kind of got in the holiday mode. Some people that got jobs were seasonal jobs so some of that stuff may be kind of a variable that could play into things. So let's take a look, see if we can see this trend continuing, more jobs being created. So if that continues, it will be obviously a lot more positive for us. So let's jump over to headline news here. And basically, the stock market's mixed today. And why is that? When we're having good economic news releases scheduled for today, is primarily because we're still watching Europe. Italy's borrowing costs went up to 7%, which is kind of the magic number for. It's kind of been deemed as unsustainable, whereas Italy and I mean not Italy, but Ireland and Portugal had to have their bailouts when they reached that 7% level, because just doesn't seems to be unsustainable. They can't keep borrowing at those costs and repaying the debt that's the cost of that debt. So with that in mind, they're just kind of watching and how that might drag the rest of the world down a little bit more. And then also another note here is I saw an interesting article on MarketWatch.com. If you have time, go check it out. Basically, it's talking about China's new issues with decline of home prices. As you may or may not know, about 1998, prior to that, was basically all government housing. And as of 1998, it gave the authority back to the people there to allow them to have private ownership. So they haven't had private home ownership for most of this generation's lives and stuff. So now that they're buying houses and they're buying on the high end, now home prices are coming down, they're having a lot of unrest, and they're not used to these cycles, these business cycles. Even with like stock market and everything else, they're not used to these cycles that come with like recessions and everything else. So they're having a little bit of unrest there. And but check it out. I think you might find it kind of interesting what's going to do, and it's going to be kind of a unknown for 2012 on how China handles this, as it is kind of a new issue for them. So with all this on mind, let's go ahead and take a look, see where the bond market is today and where interest rates are moving. We're having a fantastic day today. We're actually having some of the best. It looks like today we broke above the ceiling, and if we could stay above that, that could be obviously a floor for us and continue a nice trend upwards. So essentially, interest rates are much better today. We have a great day for interest rates. So that's also great news today. And again, if we could keep it above that level, we might have a nice little run with some improved pricing here, and hopefully stay above there or whatnot, because again, Europe seems to be on everybody's minds right now and creating a lot of concern. So that's helping the bond market, our bond market, people putting in there for flight to safety. So again, interest rates are better today, and hopefully you guys have a great weekend. If you guys are on the site, go ahead and subscribe, get your free updates. Have a wonderful day.